What if there was a company so powerful that even the richest country in the world relies on it during times of crisis? Whether it was the 2008 economic meltdown or the 2020 pandemic, BlackRock has been America's go-to savior. But its influence doesn't stop there. BlackRock manages over $10 trillion globally, more than 2.5 times the assets of the world's top companies, making it the fifth largest economy in the world. From controlling what we eat to managing Ukraine's economy during the Russia-Ukraine war, BlackRock operates like a shadow bank, wielding power behind the scenes. Let's uncover how BlackRock became the world's most powerful company and why it kept its dark dealings hidden from the public eye. Founded in 1988, BlackRock has transformed the investment management world. The firm was the innovative creation of Lawrence D. Fink, who is known for his sharp vision in the financial markets. Fink strongly believes in technology's role as a game changer, and his groundbreaking investment strategies have established new benchmarks for investors worldwide. The financial wizard's start was modest, but his climb to the top of investments fame is nothing short of a Wall Street epic. Lawrence Douglas Fink was born on November 2, 1952, in Van Nuys, California, far from the high-pressure financial hubs where he would later make his mark. Growing up in a middle-class family in sunny California, he learned early on that developing financial skills and working hard were essential for achieving success. He studied at the University of California, Los Angeles, commonly known as UCLA. Rather than just focusing on textbooks, he fully engaged in his classes and, to everyone's surprise, chose to major in political science. Afterward, he pursued an MBA with a concentration in real estate. From the start, Fink demonstrated a talent for understanding complex systems, which sparked his interest in finance. After he had tossed his graduation cap and let the academic dust settle, Larry did not lose time. He first came across the financial world at First Boston. This firm was a training ground for his later career and where his financial skills were first observed. Soon after he joined the mortgage-backed securities division, he started transforming it and took the divisional business from nowhere to an astronomical $1 billion in profit. However, this journey was not without its struggles. Larry incurred a huge loss in a very risky investment, which was a turning point in his career. It was a bitter lesson that he learned about the importance of risk management. And it was while pondering this lesson that the roots of BlackRock were planted in the back of his brain. This first Boston loss was to leave a lasting impression on how Larry was to approach business. It became his personal mission to establish an investment company that could weather the storm of the market through technology and risk management. In his mind, this firm would not only respond to the financial weather of the day, but it would also anticipate the storms and decide in advance how to avoid them. But the dream of establishing BlackRock was not only about not repeating the mistakes of the past. He wanted to demystify investment, to make it easy to comprehend and to invest in for all types of investors. Larry saw the company as an oasis in the constantly shifting desert of finance, using the best and the latest technology to offer the kind of analysis and information that only the most sophisticated investors could get. By now, Larry had 3 laser-sharp tools in his toolkit. First, there are the lessons that one gets from early career disappointments. Second, was his impulse to create something new. Third, was his desire to build the world's biggest asset management company. It should be noted that, although Fink may have had the idea for BlackRock, the team was ultimately responsible for making it a reality. That all started in 1988, at least in official records. Not only was this the year of a colossus's birth, but Lawrence and his visionary co-founders also set in motion a revolution. The 1980s saw a lot of change coming to the financial scene. The global marketplace was undergoing a rapid change, and a notable increase in the use of technology suggested new approaches to navigating the complexity of investment management and the market. Larry had seen the effects of poor risk management and was keen to establish a firm that would be able to withstand the forces of the market. His magic sauce was better risk management and his obsession with technology. But the obstacles did not cease to emerge and increase. In those years, the financial skills were not sufficient to start an aggressive business such as the one Larry had in mind. He needed financial backing. His belief in a new concept and idea of change attracted Blackstone Group that offered Fink's young company the financial boost it required. The second challenge that Fink faced was to persuade the potential clients and the market at large that his new concept of investment strategy and management was feasible. This was more difficult than he had thought it would be. At that time, the financial markets were controlled by large firms, and his vision of starting a firm that focused on technology and risk management was revolutionary. Unproven was a word that was rife on Wall Street when Fink was being mentioned in such discussions during that time. But this only fueled him. The proof would be in the pudding. He would prove the merits of their approach. Some of the other co-founders who partnered with Lawrence during the early stages of BlackRock include Robert S. Capito, who was later appointed the president of BlackRock. He played a central role in the creation of the client-centered culture that is still a part of the firm's values. Then there was Susan Wagner, who created BlackRock's risk management system known as Aladdin. Both co-founders embraced Larry's vision of analysis and technology as the main drivers and provided unique value and stability to clients. BlackRock started with a big idea: creating a risk management platform that could handle all types of risks across different investments and offer top-notch security. The company changed the way investment management was done. The name BlackRock was chosen by Larry Fink to stand for strength, integrity, and stability, values that were central to the company's mission. Initially, BlackRock focused on fixed income assets, offering clients new insights into the bond market thanks to the founders' expertise. They believed that diversifying investments was essential for growth. However, it didn't take long for BlackRock to broaden its services. Soon, they introduced a variety of financial products, including mutual funds, for both individual and institutional investors. One of BlackRock's major breakthroughs was Aladdin, their unique risk management platform. Aladdin gave a complete view of BlackRock's entire portfolio in one place. This was a first in the market and quickly attracted clients who wanted not just investment opportunities, but also a clear understanding of the risks involved. By the end of 2004, BlackRock had undergone remarkable growth and was becoming a major name on Wall Street. The firm had significantly increased its assets under management, a sign of its successful strategies in innovation and technology. This growth wasn't just about money, it was also about building trust. BlackRock's transparency in its operations helped it earn the confidence of investors and clients, making it a trusted player in the financial world. Then came the financial collapse of 2008, which devastated global markets and wiped out nearly $2 trillion. This crisis tested the strength and adaptability of financial institutions everywhere. During this turbulent period, BlackRock emerged as a beacon of stability. The firm's sophisticated risk management framework and its powerful Aladdin analytics system allowed it to effectively guide other financial institutions and governments in handling troubled assets. As a result, BlackRock not only solidified its reputation as a reliable risk manager, but also established itself as a key advisor in the global financial system. By navigating the financial storm with expertise and providing crucial advice during the crisis, BlackRock's status in the global financial world was firmly established. The firm's ability to manage risks and offer sound guidance ensured its place as a leading authority in the financial sector. In 2009, BlackRock went on a major buying spree. Their biggest target was Barclays Global Investors, especially interested in their iShares exchange-traded funds, ETFs. This deal, costing $13.5 billion, was a game-changer for BlackRock. It made them the largest asset manager in the world and the top company in the ETF market. After the 2008 financial crisis, BlackRock focused on making its investments more sustainable and tech-savvy. They improved their digital platforms, with Aladdin becoming a key tool for managing investments and risks. This focus on sustainability matched the growing interest in responsible investing. BlackRock started offering new financial products that considered social, environmental, and governance factors. This helped the company grow as investors look for more ethical investment options. Today, BlackRock manages an impressive $10 trillion in assets. Their market position is very strong and hard to beat. They serve a wide range of clients, including big institutions, corporations, individual investors, and governments. Their investment options are diverse, including stocks, bonds, cash management, alternative strategies, and real estate. With Aladdin still being an important tool for managing risk, BlackRock's impact on the financial world is huge. In the world of finance, companies like BlackRock face both opportunities and challenges. Geopolitical tensions, market ups and downs still affect investments. BlackRock has responded by focusing on corporate governance and climate change. Because it is so large, BlackRock can now influence how companies behave, promote sustainability, and shape global investment trends more than ever before. Markets as a whole and investing communities alike will be impacted by BlackRock's activities. The firm's future depends on both societal progress and financial success. The modern BlackRock constantly adapts to the markets and times while staying true to Lawrence Larry Fink's initial concept. The company's success is still based on a few guiding principles, which it keeps in mind as it handles market volatility, necessary sustainable expansion, and regulatory scrutiny. BlackRock's aim is still to succeed financially while making a meaningful social impact above all else.